Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for May 21st through the 25th. Next week's the last full month of May until we're getting into June. So I'm going to quickly go over all the news that I have for this week. We're going to go over what was posted over on Facebook, the three indexes, the main indexes, the after hours movement. Are we looking pretty positive, negative? But again, that doesn't have any effect really on Monday's market. That can change throughout the week. Stock news for the week, a lot of retail stocks, Kohls, Target, Tiffany's, TJ Maxx, a lot of retail stocks put out earnings this week. So I'm going to be covering a few of them and then talk about some financials. Wednesday, they kind of changed it up. I posted over on Facebook. We'll talk about that. And then we'll kind of go into construction, bonds, oil, and stuff. Oil had about a bit of a rough week this week, but it's been on fire in the last 3-4 weeks, so it's expected to come down a little bit. So completely normal. So I'm going to try and make this video as quick as I can, and let's go ahead and get into it. So Monday, of course, I put out a video covering the differences between EE and I bonds. I went over all my denominations that I myself had and why I was getting rid of all 42 of mine. So on Tuesday, I went to the bank with my envelope. I had printed out how much they were all going to be worth. Basically, on the back of them, I had to sign my signature, my name, social security number, my address, and then I handed them over to the teller, and she went through and punched in the face denomination, whether it was an EE bond or an I bond, and then the date purchased, and that basically gave it the total worth, kind of how you entered it on the website. And then at the very end, I had my printout, and she gave me the printout of how much they were worth, and they were exactly the same. So I was able to take all that money, and I'm going to be reinvesting it into my business bank account in order to purchase my first real estate investment property. So this was a really interesting article. Talked about American cereals such as GIS, General Mills, soda, Coca-Cola, Pepsi, soup companies, Campbell's Soups, and a few others. They're in kind of a bit of a hiccup right now. Like consumer stocks, these old companies, they're getting hit up because they have these new companies, or not new, I would say. Kroger's and Walmart been around a while, but Amazon, Walmart, Kroger's, they all make their own branded items. So a lot of these stocks, companies out here that are very specific, Walmart makes their own cereals. Kroger's makes their own cereals. Walmart has their good value. Kroger's has their Kroger value. Costco has their Kirkland. Amazon has their Amazon basic stuff. They're all competing. And if you try and undercut Walmart, Kroger's, they're going to stick your product in the back of the store. So if you go shop at Walmart, they're going to have their products placed there right up front, have them fully stacked, and I think that's going to cause a lot of these older, bigger companies to kind of fall back a little bit. They're kind of going through their own sort of bear market right now. I think that's kind of something I was reading on. Dividend stocks that are kind of consumer staples, they're having a sort of a pullback and bear market-ish kind of movement. Interesting thing, on Wednesday, the Fed was actually going to be easing up on the financial sector, but this is primarily helping out the lower end credit unions, smaller banks, making it easier for the banks to provide credit needed in order to boost the economy. So I went, I did this a couple of weeks ago where I work at a credit union. So I went downstairs and I said, hey, I need to open up a HELOC. They said, okay, fill out this information. I had to do a inspection of my home because if you do a HELOC over a certain amount, you have to have a home inspection to get a home worth of, a value of your home. That way you can do a percentage. I could do like a 95% loan to value of my home. So anyways, very interesting article there. Wednesday put out a video covering stocks with ex-dividends next week. We had 10 stocks. 2 of them have been paying out dividends for more than 10 years. Kellogg's and C.H. Robinson Worldwide. These are all PEs under 25, yields over 2%, increasing revenue, net income, free cash flow over the last 10 years. A couple of them had their yield over the price, meaning that they could be a good buy, but of course that was up to the investor to kind of take a deeper dive over the last quarterly earnings, their last yearly reports, their financials, their balance sheet and stuff. So Walmart, going through my mail, Walmart does do free same day grocery pickup. You know, I live and I work really close to a Walmart. It's basically right across the street. After work, I can head over there, pick up a couple items. I think, Walmart offers a pretty good thing, and they're going to be doing some free day grocery pickup. I think that'll kind of help them out a little bit there. And then Chase, I think that was my last this is just kind of like an open-ended question for you guys. Any of you guys out there run any sort of business on the side, whether it's an LLC, S Corp, and such? I use a credit union for my own business account, but I am looking to go to either a larger credit union, such as the Navy Federal Credit Union. They offer, my credit union, I have to have $1,000 minimum deposit at all times to avoid a fee. They don't offer any cashback cards. They don't offer a lot of little things that if I moved up from my local credit union to, say, a bigger credit union or a bank such as Chase, where Chase offers a lot of benefits for veterans. I can get $0 fee accounts. I can get a 1.5% cashback card. Anyways, if any of you guys out there run any sort of business on the side, let me know in the comment section below. What bank do you use? What are the benefits of using it and why you like it? If you guys would like to comment that in the comment section below, I'll be making a video in the future over why I'm moving completely, from a credit union to like a bigger bank, but that's basically it. So that is it for Facebook. Over on the 3 indexes now. We're 6 minutes into the video. I'm going to try and cover this as much, continuing it. So S&P 500, 5-day change up 0.31%, year-to-date up 1.78%. The market didn't do a whole lot this week, and that was pretty much expected. I didn't expect it to go up. I didn't expect it to go down. I expected it to kind of stay flat because it's retail earnings week. Retail, it's not technology. It's not going to move the markets up one way or another. It's not financials. It's not going to move the market up or down too much. It's retail. The main thing I pay attention to when I look at after hour stuff, I look at technology, semiconductors, and I look at financials. If those things are dipping, I know that the next day is going to be in the negative, and depending on the news, it can go up or down for that day. But S&P 500 up year to date 1.78%. The Dow Jones finally out of the negative year to date. Dow Jones up 0.15% this week. I think the Dow Jones may make a bit of a comeback, but it does have some of the stocks in there that I believe will continue to kind of hammer it down. General Electric, Coca-Cola, let's see here, Triple M. Let's see, what else do we have? A couple stocks that I don't think will do too great right now. Johnson & Johnson and Procter & Gamble. I think those are a little bit of a, I think they're great buying opportunities right now just because they've all came down 10, 15, 20%. But I think, I don't know. I don't know what to think there. But it's my own opinion there. I think they're going to have a bit of a tough time right now kind of competing with some of those other companies, such as the article that we posted over on Facebook. It's just some of those bigger name companies that provide either just soda beverages or cans of soup or cereal are going to just have a tough time competing, and that's going to affect the Dow Jones primarily because it's only consistent of 30 stocks. So NASDAQ is the winner this week, up 1.08%. Year to date, up 7.68%. A lot of technology here. Technology's been it's been one of the better indexes to follow. If you follow the QQQ, that is how you can get invested in the NASDAQ. It does swing, up and down, left and right, I guess, week to week. But for the most part, you're going to end up in the positive so long as the market kind of holds. Now, after hours right now, futures are looking in the negative for the S&P 500 and the Dow Jones. NASDAQ is up 0.11%. We looked at this last week as well, but as you know, on Monday, the S&P 500 did start off very positive in the green, up around 0.5%, maxed out right around 0.75, fell down a little bit, back down to 0.5, 0.65, somewhere in that range, and then finished off at 0.74 in the end of the day. So can't really use the after hours, but what you can do is you can see what's most active. So here over on Market Watch, what I like to look for in the after hours is what's the most active. I like to look for semiconductor stocks or technology and financials. So here we can see the MUs here, Micron Technology, but there's not a whole lot of other financials or technology stocks. There's a couple pharmaceuticals, there's some retail stocks in here, insurance stocks in here, but it's just a mixture of stuff that doesn't really matter. So for the most part, depending on news on Monday, I think we'll either have a pretty flat day or a positive day. So Micron Technologies is a big one here this week. So I'd like to talk a little bit about this. When they released their earnings, which their shares rose up by almost 3.94% early in the day, finished off at 3.91%. So this is actually leading the S&P 500 in gains as the company announced it would raise its expectations going forward. The company was able to raise their revenue forecast for the third quarter, which investors were completely happy about. The company was also had made over 50% of its sales coming from China. So the whole trade talk, the trade war, they never said it was a trade war in the past, but now they're saying the trade war has ended. China and the U.S. has come to an agreement, and the whole trade war is being put on hold, quotes. But that boosted sales and the stock market on Monday. And then what happened on Tuesday? See this huge spike right here, up 6.4%, followed by 1.59%, followed by 2.53%. Well, after their earnings, after seeing that a lot of their sales have come out of China, their stock jumped by 6.4% because the company announced that it was doing a buyback of $10 billion worth of stock. So they're following suit right behind Apple. I believe Apple had 65 billion, or maybe that was how much Warren Buffett bought of them. But anyways, they're buying 10 billions worth of stock, so that they already have a very low PE ratio. I know Jeremy over the Financial Education channel talks about this stock quite a bit. 15-day change up 14.91%. So what else did they do? They also reported they're going to begin to work with Intel on making some new chips. So Micron Technology and Intel. I thought Ryzen had a bit of a deal with Intel as well. So there's a lot of chip making companies working together, NVIDIA as well. So I thought that was all really interesting. I think Micron Technology is actually a really good buy. Regardless of the price right here, I could see it kind of rising up a little bit further. I don't track this one as much as I should have probably in the past, but a great stock there. Now, I was reading through this article here talking about earnings and retail. So with results from 93% of the retail sector's market cap in the S&P 500 out. So 93%, right? Okay, so right now we're going through retail earnings season. 93% of the retail stocks have announced their earnings and revenue, and it's been a really positive. So the earnings and revenue growth is on track to be notably above other historical periods through positive revenue. Surprises are not as numerous as had been in trends in recent periods. Basically, a funny little article talking about Target, Kohls, Walmart, and stuff. I don't know why I kind of covered that, but TJ Maxx, one of the retail stocks, of course, I was kind of reading in the retail, their stock jumped up 3.25%. Following very strong earning results and positive guidance going forward. Their earnings showed growth of around 24, 25, I think it was like 23 point some percent, but basically 24%, and their revenue was higher by 9%. So the CEO said that they have a whole lot of customer traffic coming in, and that really helped their shares jump higher. So right now, 5-day change up 3.92%. Year to date up 15.24%. This is a stock I would not expect to be doing as well as it is. Ross is another one I'd probably look at. Ross, TJ Maxx. If you're a consumer going out there looking for bargains, those are two places that you shop, because if you have cash to burn, that's where you'll go. So interesting there. Followed right behind is Kohls. So Kohls on, let's see here. Oh, they dipped. Okay, so Tuesday they released their earnings. They fell by 7.42%. So despite they reported strong profits and revenue, but their store sales were great on the quarter, but comments of the weaker expectations for the future sent a bit of a sell-off right there. So it was oversold, falling nearly 7.5%. Investors thought it was a great bargain, being a dividend stock as well. They bought into it at the dip. Wednesday, Thursday, Friday, rose up, ending in a 5-day change of 2.53%. So these are those good opportunities. Even, they released really good expectations. They beat their profits, they beat their revenue. But, they said that they're going to have a weaker upcoming quarter, and that kind of caused their stock to oversell. So with retail being hammered as much as it has been lately, I don't know if Kohls would be a good buy. I know they're doing some sort of reconstruction inside their stores. I haven't shopped at a Kohls in quite a while, since Black Friday. That was back in November, so I can't tell you how it's changed. Now, one that did have a bit of a hiccup here, Target was, I think, one of the roughed up ones. I think Lowe's as well was low. Oh no, Lowe's went up. So Target down 6.23 this week, and one of the many retailers to suffer with the sell-off of the earnings news. The company reported earnings for the first quarter, which came in below expectations. Their shares did sell off by, for the week down 6.23%, but on the date down 5.7%. So this could be a good opportunity. They're still down for the week, a little over 6%. If you're interested in having, buying Target in the past, this could be a great buying opportunity. They were up 15% year to date, but with this sell-off this week, they are now up for the year to date 9.13%. Now, Tiffany's is the winner of the retail. Yeah. Okay, Tiffany's is the winner. So Tiffany, I always have to check because so Tiffany's, their shares rose on Wednesday by 23.29%. Tiffany reported that had well beat Wall Street's expectations. Their earnings per share came in at $1.14 compared to their expectations of just 83 cents, and that prompted the company to raise its full year outlook as well. So good news. Well, good news. And what else? I think they're doing a share buyback as well. They're going to be buying back $1 billion of their shares as part of their repurchase program. So that also helped their company as well. So they beat expectations. They released good future earnings expectations, and they announced that they're doing a $1 billion share buyback. This is one, Tiffany's being the jeweler. I didn't expect Tiffany's to actually be popping as much as it had. That was something I had read on Lowe's. Yeah, Lowe's didn't do so well as far as their earnings. So let's see here. Yeah, so yeah, they didn't beat their earnings here. $1.19 a share. They missed the consensus, the estimate of $1.22. But over the last year, it's up 15.5%. I was kind of reading through that. So Lowe's, they didn't beat their earnings or their revenue, but their stock jumped 11.99%. So the reason I kind of want to talk about this, because yeah, they didn't beat their earnings, they didn't beat their their earnings per share estimates, but what had actually helped their stock was that let's see here, I have it in my notes. Bill Ackman of Pershing Square had $1 billion position in the company, and yeah, he's revealed as a hedge fund manager, and that kind of jumped up any of their losses that they had made the day prior. They regained it and continue to grow for the 5-day change, up 11.99%. So while their earnings and their earnings per share and their revenue didn't meet expectations, just because this hedge fund manager bought $1 billion of the position in the company, that shot up the stock by 10.43% in the week, up 11.99%. I thought that was really crazy. I think Lowe's is a great stock. Lowe's, Home Depot, Costco, those are all great blue chip stocks. And I was just really surprised at that one. So LB Brands, they got a boost today of 3.44%. Right on there. The parent company of Victoria's Secret and Bed Bath & Beyond, they had released their earnings and had actually beat expectations, as well as net income for the first quarter. The stock had been kind of slowing down prior to earnings. They didn't really know, the investors didn't really know what to expect, but what actually caused, let's see here. Let's see here. I don't know if they increased their dividend or just kind of continue to kind of hold it out, but stock down. They did lower expectations kind of going forward, but it didn't seem to affect their overall change for the week. So they did dip a little bit in the after hours, rose back up on opening day, and kind of continued on. Footlocker was another one. My buddy likes buying Footlocker shoes. He always posts pictures of his shoes that he buys at Footlocker. I think he had worked there or something. He got a very nice employee. Anyways, he's really invested in the stock. He posted a picture and sent it over to me saying that he had a major win this week. I didn't believe him because who shops at Foot Locker, right? So 5-day change up 28.31%. Basically because the company had beat Wall Street's expectations of, so they had a $1.45 earnings per share versus expectations of $1.24. So very crazy, up 18.90% year to date, and that's basically they were in the negative by 10%. So just in a single week, they went up from negative 10% year to date to now positive 18.9%. That's amazing. I thought that was incredible myself. And next we have Gap Inc., ticker symbol GPS. Now this one down 10.83%, year to date down 17.35%. This company cannot get a break. They had excess inventory. They also missed their earnings, their revenue. So this stock plummeted just due to future expectations. Investors were not kind of holding this one. This is one I can't see working as a retail store. Gap is at the very bottom. I remember nobody shopped there when I was in high school, and that was 10 plus years ago. So now I don't know how this stock is still here, but still wanted to cover it this week. Down 10.83% just in 5 days, 17.35% over the year to date. Now, this is what I kind of want to talk a little bit about financials, with the change on Wednesday. So on Wednesday, financials were mostly down as the president signed the rollback of some of the regulations imposed on banks during the financial crisis. This move aimed to ease regulations on some of the smaller banks, now with under $250 billion in valuation. So credit unions and smaller banks, they're going to be helped out by this whole change. The financial sector ETF is made up of a whole lot of companies. I posted one, ticker symbol X. Whoop, your license will expire soon. I got to get a new license. Retail, financial. I posted two of them. I posted one over on Facebook here. Where'd it go? Right here. I had VFH, and a second one here is XLF, Financial Select Sector, and Vanguard Financial Index. And they'll kind of have very similar stuff. JP Morgan being the primary one, Bank of America, and Berkshire Hathaway right up there on top. But anyways, so American banks posted their most profitable quarter ever. And what had happened is a lot of these stocks down for the year. So JP Morgan over the last 3 months down 5.67%, year to date up only 3.48%. Goldman Sachs 3-month change down 11.91%, year to date down 7.75%. Now the ETFs here that I'm kind of tracking along, this is XLF down 0.21%, and we have the Vanguard Financial Index, ticker symbol VFH, up 0.77%. So this is really interesting that banks' profits soared 28% during the first 3 months of 2018 to $56 billion. Goldman Sachs had released earnings just a bit ago. I followed Jeremy's channel, and he talked about Goldman Sachs posting incredible numbers, beating expectations on their revenue, on their earnings per share, making so much billions of dollars within the quarter, but their stock actually fell despite all those positive things kind of going for it. And kind of watching a lot of stuff kind of going on as far as the banking is what kind of banking and technology is what kind of holds up the whole the market. If the banks and the financials don't move, then the whole market doesn't move. If we're having 50-50, it's going to stay in the middle. So right now we're kind of waiting for the banks to kind of kick into gear here. And while they're being very profitable, I'm just not seeing any sort of uptrend. So I think that's kind of interesting. These could be great buys depending on how the market goes. The financial sector can continue to fall and fluster. I just think it's really weird that we're posting incredible profits over the last 3 months, and just the best, you know, Congress president cut regulations to the financials and financial stocks, and they're most profitable. I thought that was really interesting. I don't know about you guys, but let's see here. Home construction ETF, ticker symbol ITB, down for the year, still 10.93%. 5-day change up 1.25%. Last week it was down, I believe, about a point. This week up 1.25%. Oil down 5.2% this week. That is completely normal. I saw some comments on some of the other channels and some of the Facebook groups talking about, hey, oil's pulling back 5% this week. You know, is that something that we should consider and look at? And, you know, oil over the last, 3 months? Not even 3 months, just over the last month. I thought it was a month, maybe more. Okay, 3 months, up 7.13%. So it was up by quite a bit. You can see here year to date up 13.91%, which is actually beating the S&P 500. So completely normal to see these sort of pullbacks here. They've happened in the past. You'll get like a 5% pullback and then it'll kind of rise again. So nothing to worry about there. Silver up 0.32% and gold up 0.65%. What are we at? Almost 30 minutes. I'm going to go ahead and end the video there. I think we kind of hammered every single thing that I want to talk about this week. You know, interest rates are continuing to sell off as bonds are getting purchased. I follow a couple other YouTubers who feel that the stock market's kind of being held up right now due to, you know, the bankers and such buying the bonds, which is causing the 10 yield. It was up to a high of 3.10% last week, but now it's fallen by it's fallen to 2.93%. So there's a lot of prop up that I'm hearing in the stock market, which, you know, could be good or bad. They're expected that the market will continue to trend either sideways or move positive until mid-elections, and then who knows after that. But that's just some news and gossip that I've heard. So that is basically it for this video. If you guys do have any sort of questions or any sort of comments or anything, go ahead and let me know in the comment section below. I always appreciate your guys' feedback, regardless of what it is. You guys can just say hello. You guys can ask me a question. You guys can talk to me about whatever. I always enjoy going back and forth with viewers and subscribers. So that's basically it for this video. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. Thanks for tuning in. I will see you next time. If there's anything you guys would like covered in any sort of future upcoming videos, let me know in the comment section below and I will try to include it. And that is it. Thanks you for tuning in. I will see you next time. Have a great day. Bye.